Hello, everyone. Welcome back to the Options Professor podcast. This is Damien, and today is Friday, April 30th, and a good ending to this month of April. I'm going to recap actually some of the trades within my watch list that I had called out and see how those did. And then 3 actual trades that I made, credit spreads through the week that were all profitable this week. So let's take a look. I've got my screen here. We can take a look at the watch list that I had published Sunday in my video. If you do not subscribe to my channel already, please like and subscribe this video. I publish a watch list every Sunday night that targets week to week target support levels, resistance levels, and also targets for those stocks to run to. All right. And typically 5 to 7 trades or 5 to 7 stocks that we're looking at every week that we could potentially sell credit against or take debit spreads and capitalize on some movement. All right. So here we go. First stock on the watch list was AA, and as you can see here, I said support at 33 with range to 37. And if we could take a look at what happened Monday, it did hold. So it came out Monday, took off, but again, that 33 level was always safe. So if we could have gotten some credit, I don't think so at this level because it had taken off out of the gate early in the week. But as we can see here, target to 37 and this thing ran up to 38. So it did do what I expected it to do. It just happened a little bit too soon. No chance really to get into this trade. We could have moved it up. You know, I said in the video, I'm watching the 50 moving average. And so here, if I'm watching the 50 moving average, I potentially could have taken 35 as a level of support and sold credit here as this thing kept moving up. All right. The second stock on my watch list was Z. All right. So Z has earnings coming up next week. I think I mentioned that in my watch list. In 130 support with range to 142. So 130 is right around here. This one did have an opportunity to get in because as you can see, it hovered around this area. And, you know, it kind of ran up and then came back down. So even though it was kind of worrying today, it did come back down to the 130 level. It did not breach that 130 all week. So this one would have been a good trade for selling credit at the 130 level. And then that range to 142, you can see here, 142, it actually touched 142 and came back down. So again, another stock on the watch list that would have been profitable had I taken those trades. UNH, I mentioned 395 support with range to 405. And if we see what happened with UNH, it actually did breach that 395 for a day, but then came right back out of it Thursday and today, Friday. So this would have been a safe trade as we closed out today at, looks like 3 or right around 400. Right around 400. But just looks like it sold off just at the end of the day, so it closed just below 400. But the 395 was still safe, and I said range to 405. It did go up to 402. Potentially could have made the 405, but that's fine. It doesn't matter when we're selling for credit. We're selling premium at 395 and hoping that it does not come below this 395 level on Friday. And this one would have been a great play as well. ABC. ABC was 120 with range to 123. And this was kind of scary. Monday morning, it came out of the gate and just went straight down, right, all the way down to 118 and back to this 200 moving average. 200 moving average was a good level of support. But even if you played the 120, you could see it came right back to the 120 level and closed out Friday at 120.91. So, you know, it really depends. Had I been watching this one, I probably would have tried to take credit around this 200 moving average. I don't think I would have taken it at the 120 once I saw it had the momentum to potentially breach it. But again, this is still a good stock at the 120. It's a shame that it has earnings next week. So this one takes it out of play for me going into next week. I just don't want to have the volatility of holding this one through earnings. And the last one was EMR. And EMR, I said support at 91. And it looked good, actually looked good the whole week up until today. And then today, I'm not sure if there was news that happened that just drove it right down past 91 and closed off at 90.74. So, depending on how I would have played this had I been in it, I probably would have been out yesterday. I typically get out Thursday or early Friday morning. Um, or at this point it was just 26 cents below. If you had taken 26 cents credit, you would have been break even. So again, played out, probably hit some news today that drove it down. In all of these bullish stocks, a couple of them probably not playing out, but three of them looking really good through the week. And then the two bearish stocks, FDX. I was looking at FDX earlier in the week, and it took off on Tuesday. And the reason why it took off was because there was news on UPS. UPS had its earnings. We'll take a look at its chart in a second. So even though FedEx did not have earnings this week, it's next week, it was a sympathy play for UPS. All right. So it's one thing that I probably should have looked out for was were there any other earnings happening that would impact this stock? And yes, there were. There was UPS. So would not have been a good candidate to play this week for our credit spreads, simply because there was a news event happening that would impact FedEx. Because if we take a look at what happened with UPS after earnings, we can see earnings happen on Tuesday, and then from that point forward, it just took off the next morning and kept going up. So they had some really good news on their earnings. All right, and then the last one on the bearish side was PTON. PTON, real quick, I said 110, and this was the 200 moving average up here. The 50, this blue line is the 50. I like following that as a more aggressive play. And as you can see, it just stayed below both of those. So this would have been a really good play. It has earnings next week, so we can't carry this into the next week as a credit spread. But this would have been a nice call credit spread expiring today. All right. So out of my watch list, some pretty good nuggets in there. Had we've been able to play them. I did not take any of them though. I did play Disney. And as you can see here, Disney, I was playing the 180 support, and it was fine. It kind of trended up. Parks reopening in California. That's the news I was hoping for it to bump back up. And I ended up closing this out a little bit early in taking a 15% profit. I sold the 180 level. Only took a couple days uh, of the premium decline and then locked in 15%. The second one I was in was Square. Again, I closed this one out early, and it really didn't matter. It came back down through the week, but I'd sold the 240 level. So as long as it held 240 by today, it was fine. I managed to lock in 20% on this as I think as early as Tuesday. So that was a very easy 20%. And then the last one, which had me worried yesterday, was Tesla. And I did this off of earnings. So as the earnings report came out and it sold off, I thought it would hold this 200 moving average, this purple line, this 200 moving average, which was at 690. Now yesterday it dropped below, but then recovered today over 690. So I was able to lock in 32% profit on this. All right. So overall, 3 trades for my portfolio. Tesla at 32%, Disney at 15%, and Square at 20%. Again, these are alerted real time inside of our Discord. I'll put a link below if you'd like to join us for the free chat or upgrade to premium, where we will educate you on various credit spreads, debit spreads, options trading in general. Happy to have you join our community. It was a great week for me. Hopefully it was for you too. I will be back Sunday with a brand new watch list. Take care.